Hey everyone, good morning, happy Tuesday. Here we are, it is Tax Tuesday and my name is Heather Ryan. I am the owner of Tax Queen and I'm here to do live Tax Tuesday where I answer your questions that have been submitted previously, and if we have time, you can also drop one in the comments and I will try to get them to them live and answered. It's definitely been fun. I've been doing this now for several months and I love the interaction. So just let me know if you're here, where you're watching from. If you have any questions, just leave a comment. That would be awesome. And I'm happy to have you here. So let's dive in. I do have several questions that were sent to me prior to today. If you see me looking off to the side, that's because I have the questions open on another screen so I can keep everything flowing properly. So here we go. Number one, I'm selling things online with the 1099K form. Just earned, sorry, this isn't written well. So let me just try to paraphrase. If you receive a 1099K, is that just your income earned that is reported? Or things you got, or where you got things you sold as well? I'm not really understanding that. So let's just explain what a 1099K is. A 1099K is issued from a third-party payment processor. So that can be something like PayPal, it can be a Stripe, it can be a Square if you're taking Square payments, if you're using QuickBooks to do invoicing. It's a 1099K is just the payments that you're receiving through that third party. And yes, that is reporting your income. So a 1099K is not reported anywhere on a tax return. There is no like where to enter that form. You just need to report your income and it should either match or be higher than the 1099K that's reported to you. So I hope that answered that question. I tried to paraphrase there a little bit and give a little background. So 1099K. Next question. Again, please leave a comment if you have a question right now going in live, because I will get to answer some live. I almost always do. So next question is, we're full-timers and we use our RV for business travel. We understand the IRS deduction for business travel in 2022. This is actually wrong. So there was a split in 2022, but I'll get into that in a second. Does this figure apply to all vehicles, or is there special consideration given for the higher cost of operating an RV? So there is no separate higher cost for operating an RV. IRS has mileage set for the year, and that's that. There isn't a distinction of a vehicle size or cost. You know, that said, you can have this really expensive BMW and a Toyota or a Honda or Hyundai, it doesn't matter. They all get the same standard rate. So in 2022, we had a very unique year in that we saw inflation and costs rise astronomically. So the IRS decided on July 1st that the standard mileage rate for 2022 was going to increase. So January 1st through June 30th, you were at 58.5 cents per mile. And after, so July 1st through December 31st, you are at 62.5 cents per mile. So it is really important, if you're going to take mileage, to split the year. Look for that January to June 30th, take the mileage for that amount and add it up, and then July 1st to December 31st and take the mileage for that and add that up. And you can add those two numbers together to get your standard mileage deduction for the year. So just to repeat, there's no extras for an RV. It doesn't matter that it costs more. The IRS doesn't differentiate. So we have a small racing business and use our RV the majority of the time for business. We are wondering if we take this deduction as a vehicle expense. So same question really, right? We're looking at, I'm going to dive deeper into this actually, since we have two questions, funny enough, related to mileage. So there are two ways to take mileage on a tax return. What I just talked about with that standard mileage rate with the 58.5 cents and the 62.5 cents in 2022 is the standard mileage rate. So that is the rate that the IRS sets for the year, again, we have 2 rates for 2022 because we're looking at 2022 tax for prep right now. So that's the standard mileage rate. That includes all of your expenses, right? Your insurance, your depreciation, your gas, your what do you call it? Registration fees, anything that you can think of, maintenance for the vehicle. That is including all of it. So they're just giving you a per cents per mile that you are allowed to take. Standard IRS deduction. You just have to record your mileage for the year. So your full mileage and then your business mileage. You need to record both. So it should include personal and then your business is separate. So your total mileage. If you want to take actual expenses, which is what this question is about, really, taking storage, insurance, fuel, maintenance, registration, depreciation, that's actual expenses. So you still need to record your mileage, full mileage for the year, total mileage, everything you've driven, and then your business mileage. And I'll give you a tip for that in a second. And then you get to take, based on the business percentage of use, all of those costs. So it can be higher if you're using the vehicle for 90% business. For sure, that's going to be possibly a higher deduction, but there's a lot more bookkeeping, a lot more record keeping that you need to keep. So you need mileage and actual costs, all of the costs to operate that vehicle, put it on the road. And you will take it as a percentage of business use. So I hope that's clear. There's a couple of things I want to talk about there. If you take actual expenses the first year you put a vehicle into service, you must always take actual expenses going forward for that vehicle until it comes out of service. And that is a disservice at times because someone says, well, the first year I had all these expenses or whatever else, and then subsequent years, it may not be that high. So I really like to look at it as not just one tax year, but we're looking at tax planning. So we're looking at this year, the next year, the following year, like how many years are you going to have that vehicle in service? Is it 5 years? Just think of that so that actual expenses may actually decrease as you have that, as you lose depreciation over years. So just really think about that. Again, if you take actual expenses, you must continue to take actual expenses. So if you take the standard mileage option, you can actually flip the next year to actual expenses. So just telling you that. And then also just one tip of how to record your mileage. So I know we're already in February, but really I like to say January 1st or December 31st, whichever day you choose, write down the mileage on that vehicle. Every year, make it on your calendar. Write the mileage down of that vehicle, because then you know how much you drove the entire year, total mileage. So then separately, you're going to have an app or some kind of logbook where you're recording your business mileage. And that's going to give you business mileage and total mileage, and you know the percentage of use. So that's my tip. I know we're already in February, and maybe you're watching this even recorded later, but go ahead and get that mileage down right now. So go look at your odometer of the vehicle and write it down somewhere. Put a note that you'll remember, and put a note on your calendar to do it for December 31st or January 1st of the next year. So there's my tip. Those are 2 questions about mileage. So I went and dug a little deeper beyond what the questions kind of asked. Hopefully that cleared up mileage and yeah, asked. Hopefully that cleared up mileage. Okay, cool. I am just starting to see a couple comments. Hi from Georgia. That's awesome. I love it. So let's see. Next question. I am a Florida resident. In the winter months, I work in Florida. Cool. I'm considering a 1099 summer assignment in the state of New Jersey. It will be less than 6 months. Does an LLC or an S Corp get taxed the same as an individual for out-of-state work? Should I set up an LLC or just pay self-employment taxes to New Jersey as a non-resident? So if you're physically working in a state, you owe taxes to that state. So if you're spending 5 months out of the year physically working in the state of New Jersey, your income is earned there. So no help from an LLC and an S Corp. You still have New Jersey income and you pay New Jersey state taxes. So it's not self-employment, it's just state taxes. Self-employment would be to the IRS. Let's go in a little deeper to that. So just to clarify, what does an LLC stand for? An LLC is a limited liability company. It offers no tax benefits on its own. I feel like I get questions about this all the time, and I feel like I'm always answering them, which is awesome. I love that people are researching and trying to understand all of this, but an LLC does not offer tax benefits on its own. You are still a sole proprietor. You're responsible for those self-employment taxes, which is your Social Security and your Medicare, which is why I say those are IRS taxes, not state. And then, yes, if you're working in a state, then you do owe those state taxes as a non-resident because you're not spending, in New Jersey particularly, yeah, it's the 180 days or 183 days, whatever. So you're non-resident. So sorry to say, you still owe New Jersey state taxes. A lot of times I do like to see someone in that kind of push to be a W-2 employee because then the employer actually pays half of the Social Security and the Medicare tax. So it's a benefit. So yeah, definitely hopefully that cleared that up. I went into a little more detail than I think you were looking for. But yes, if you work in a state, and that goes for like work campers. I see work campers, spend the summer in New York or Montana or Colorado. You owe state taxes to that state. So sorry to break that news to you. So last question that I received in advance, again, go ahead and write any questions you have in the comments here. I am happy to answer live questions. If I don't receive more questions, I'm gonna cut this off and cut short, but let's go into my last question that I received in advance. I'm finding it hard to go to use one app for mileage, another app for my receipts, and I haven't even started tracking any expenses. So I don't even know if my business is profitable. What's the best all-in-one app to track my expenses, my mileage, receipts, and all of this stuff? Okay, so this is really like, I get it. I love that you're looking to understand your business finances and understand your expenses, make sure you're profitable, and also track mileage. That's really important to have a written receipt, which written can be electronic. I want to say the best option, if you want all-in-one, is to use QuickBooks. And why do I say that? Is because QuickBooks, it does all of it. So you can connect your bank accounts, you have automated, it's pulling all the transactions, you can connect your credit cards, so you know your expenses. Because you're connecting your bank accounts, you're also going to see all your income. And then the app on your phone, if you enable it, will track your mileage. Awesome, perfect. And then you can even upload receipts. So if you have the app on your phone, you are out somewhere. I like to use the example of going to Best Buy to buy a piece of equipment for work. Walk out to your car, take a picture of that receipt, upload it right into QuickBooks. So if you open the app, it will literally say like add receipt. So I really like that for an all-in-one, easy. We all carry a smartphone in our pocket nowadays. So I feel like we do, many of us do. So yeah, that to me is the best. And I do offer a discount, just so you know, for the first 6 months. I'm going to add my link here. You get a 30% discount for 6 months, which is greater than usually the 3 months that they're offering on the QuickBooks site. So if you use that link, you should be able to get your QuickBooks discount. I see someone else joined in a horse camp from the Carolina Foothills. Very cool. I like it. Let's see. So those are all the questions I got in advance. Again, if you would like to put in any questions, I do see one. So this is the person who asked about the 1099K. So yes, we talked about the 1099K, and then you're saying that it includes the sales tax number. Just put the sales tax as an expense, sales tax paid. So that's super easy to handle. Yeah, 1099K is income. And then if you had an expense of sales tax paid, it should actually show in your bank account that you paid a check or whatever, even if it's electronically, to that taxing authority, and that counts as an expense. So if that's showing on your income, yeah, take it as a deduction. So easy enough. And you have the proof, hopefully, because you sent either a paper check or an electronic payment. So easy. And you also had to file the sales tax report, which is also proof. So easy peasy, I think. Hope that answered that question. Let's see. When I went full time, I rented out my house. Last year, I collected rent in cash, check, and Venmo. Do I report it all as rent? It is absolutely all rent. It does not matter how you receive the money. It's physical money in your account, so it is all rental income. You do not have to separate out by type. It doesn't make a difference. Doesn't matter if someone paid you via credit card. So yeah, it doesn't matter how you receive it, cash, check, Venmo, they're actually all the same. It's money, cash in your bank account. So definitely report that as income. So cool. I love all these live questions. This is awesome because I didn't get too many in advance. So keep them coming and I will stay here. Otherwise, you're going to lose me. So yeah, let's see. We've got someone else asking a question. Sorry, I'm leaning forward to actually be able to read these here. So we are full-time RVers and have a small RV services business where we perform service on the road. Can we apply any of the campground costs? That gets a really sticky situation. Because that's also your personal lifestyle choice, that because you're full-time. So to me, that's not a business expense, that's just your personal rent. It's really also, in this case, I usually recommend not taking campground fees because it's not a business expense. It's a personal lifestyle choice. That's your rent for moving your home because you don't have an apartment or somewhere that you're paying for. That's how I see it. I know others will look at it as, well, this is a business expense. I'm coming and I'm servicing people maybe in this park or in this area. So it's also a risk factor of can you explain it? Can you back it up? Will the IRS accept your explanation and your details? So that's how I like to look at everything you put on your tax return is, can you defend it in an audit? The IRS questions why this number is the way it is. Can you show records? Can you prove that it was a business purpose? And the reason why I usually say no is when you're living full-time in your RV, there's this mixed use. So it's not 100% business use. It's personal at that point. So I hope that answers that question. Yeah, so you're welcome. And yes, Venmo and a lot of those other apps were supposed to provide reports. The IRS pushed it off 1 year because these companies just weren't ready to provide the reports to people. So that was supposed to happen for 2022, like tax year 2022, so happening in 2023. It was pushed a year, so it will be happening in January of 2024. So you still have to report if you were to use Venmo or any of those cash apps, Zelle, any of those. Report all of your income. Don't worry about a 1099K. They were supposed to, but it's been extended or pushed up a year, pushed back a year, whatever word you want to use. So yeah. More questions about that 1099K. I love it. We're having a conversation here. The owner of the mall collected and paid the sales tax to the state of Colorado, but is part of my 1099K total. Can I still deduct this out and show it as an expense? Oh, that's a great question. Let me think about that for a second. So the owner of the mall has the sales tax license. So no, you cannot deduct it because you don't have the sales tax license if it's the antique mall owner that is collecting and paying it. But it also shouldn't be included in your 1099K. I would actually ask them about that. Because that's not really fair. That's not income to you. So I would go back to that owner and explain your situation and ask them to correct it. If your income for that business was over the 1099K amount. So let's just use a number. Let's say you had $5,000 on the 1099K and you're going to report $10,000 of income. I wouldn't worry about it at all. It doesn't need to match exactly. But if that's your only income, I would go back to that owner and try to get that corrected, because I don't think you can take, because it's their sales tax license. So hope that clarified that all. Let's see, I want to make sure I'm getting everything. So follow up. My daughter got reports from PayPal and Venmo, and it freaked us out. So yes, PayPal has always sent 1099Ks. That's nothing new, but Venmo technically did not have to start this year. And I forget one of the other ones, but they lowered the threshold basically, and the companies pushed back because they just felt like they weren't ready. So that's why it got pushed a year. But if you received one, don't worry about it. Don't freak out. It's normal. Just make sure you're reporting all your income. Again, a 1099K doesn't actually go on a return. Like, it's not a form that gets reported onto the tax return. It's an informational return, so that when the IRS sees your income numbers, and if they don't match that 1099K or are higher, then it can raise a red flag, and they can dig deeper into your return, that you're not reporting all your income. So yeah, just a little more on the 1099K. What else do we have? What about trade shows and rallies? Can this be considered rent? So I would not consider trade shows and rallies as rent. I would consider those as conferences or events for business. They could be a cost if you are going there to get business, if you have a table or something set up, if you're doing a seminar or whatever, they wouldn't be considered rent in my eyes. They would be more of a conference event. So I hope that answers that question. Thank you so much for engaging with me. I'm really enjoying this. So let's see. I think I got all the 1099K questions. If I sold a property and received a 1099, but I did it as a seller financing, I'm still only reporting the amount so far this tax year. I'm not quite sure I understand that question. Yeah, I'm not quite sure I understand the question. I know, like, if you sell property, depending on if it's like a rental property, an asset and you get capital gains, so you'll get a 1099 reporting the capital gains on there. If you sell a personal residence, you may get a 1099S, and a lot of times they don't matter. You get $250,000 per taxpayer. So if you're single, it's $250,000. If you are married filing jointly, it's $500,000. So you get that amount tax-free on a personal residence. You have to have lived there for 2 years or more. So that, yeah, I'm not quite sure I understand this question. In other words, so like you sold that property for $500,000, but you haven't actually received the $500,000. You are on an installment agreement. So you would need to fill out an installment agreement, and you have an installment agreement sale on your tax return. So you would report the income you received. Let's say it's 5 years. I'm trying to make this really easy math here. So you got $500,000, basically you seller financing. You're going to receive $100,000 the first year, second year, third year, fourth year. So each year you're gonna have an installment agreement, and you're going to receive $100,000 of that 500. And don't forget interest. Seller financing, you get interest. I'm hoping you get interest. So make sure you also include interest income. So I hope that answers that question. Thank you for the little bit of clarification. But yeah, that's an installment agreement. So that might be, that's a little more complicated. Don't usually see that with homes, but I do see that with businesses. And I guess if it's a seller financed home, then that does make sense. So. Okay, one more question about the 1099K and the sales tax. So if you have a sales tax license, it's just how is first year that he's done this. So you have a sales tax license and the mall owner collects the tax and include it in our 1099K. This is the first year he's done this. I thought I read online that it now includes sales tax, which I think is unfair. It really shouldn't. Sales tax is not income to you. Sales tax is sales tax. You are collecting it on the behalf of the taxing authority for the state and then remitting it or paying it to that state. So you should qualify for reduction if you actually have a sales tax license. It's just that gets really sticky because it's hard to prove because you didn't write the check. It should not include sales tax because that is not income. So whoever did that is incorrect. Sales tax is not income, it is a sales tax. So I have seen like small business owners include the sales tax and then just deduct it as an expense. So it really evens out. But in your case, you're not actually paying the sales tax. The mall owner is, the antique mall owner. That's the catch. So you don't have proof that the sales tax been paid, right? Because you haven't filed the returns with the amounts due, and you haven't sent a check or made an electronic payment for those amounts. So that's why that's a catch. And I would ask them to remove the sales tax from your income because it's not income. So I hope that's clear. I tried to restate questions for those watching this recorded and not live. So this is just really all about receiving a 1099K and getting sales tax included in that number, and sales tax should not be. So just reiterating that sales tax is not income. Sales tax, you are just collecting it on behalf of the taxing authority. Yeah, there were a lot of changes to the 1099K. Again, they were pushed a year, so they really shouldn't happen until 2024 for tax year 2023. So in January of next year, we should start seeing more of those forms be issued. So yeah, I hope that answers that question. And if anybody else has anything they want to ask, I will stay on for another minute or two because yeah, I've given this time and dedicated it towards this. I really enjoy engaging with my clients and answering questions and helping people, as many as I can, really. So this is a time for you. If you're catching this on a replay, feel free to go online and submit a tax question for the next one. So I do Tax Tuesdays the first Tuesday of every month, and I will include this link so that you can submit a question. If you don't get it live, there's for your next month. And next month we are looking at March 7th, so same time, 10 a.m. Mountain Time. And yeah, let's see. I did answer your question using the RV as a vehicle expense, and I would need to know more of your situation. So if you became a client of mine, I would have either through email or a phone call just to really understand exactly what you're doing, exactly the business use. If you have another residence that you go back to, apartment, a home, a condo, I would really dig in deeper. RV mileage and RV business use is definitely a red flag if it's your full-time residence. So it's kind of hard to prove business use when you live in the space as well full-time. That said, I have clients that do use their RV strictly for business and take it out, and that may be your case. Yeah, see, I do have a residence. So in your case, it may be perfectly fine to take it. Again, I would just want to talk with you individually and understand your situation so that I'm guiding you in the best way. And I'd hope if you found a different tax professional that they would do the same thing. So just making sure that they're asking you all the right questions to really understand your situation and what works for you. I do have clients that use an RV for business. They maintain a home, so they're not full-time. And that RV is definitely a business expense. It makes total sense. That's all it gets used for. So hopefully that helped answer your question. If you have further questions related to that, I definitely would talk to a tax professional. Just make sure that you're not raising any red flags and you're doing everything correctly. So yeah, just so you know, I do tax prep and I do work with my clients on an individual basis, learn their situation, to give them the best deductions and hopefully not raise red flags. So yeah, hopefully that helped, and you're welcome. So if I don't see anything else come through, I am going to sign off for the day. I really appreciate the interaction, the live questions. I really enjoy being here. I enjoy helping all our taxpayers answer your questions. So yeah, share it with your friends, on your fellow nomads, and submit a question for next month, again, March 7th, 10 a.m. Mountain Time, and I hope to see you then. Otherwise, have a great day.